I've never seen the demand for precious metals even remotely close to what I'm seeing right now, ever in 34 years. Not even close, not by a million miles. And I will stick to what I've been saying on your show for the past 2 years. This market will define itself by the inability to source product when the music stops.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. Are we standing at the precipice of the most astonishing bull run the silver market has ever witnessed? In a world where the twists and turns of the economy often feel as unpredictable as the weather, something incredible is brewing in the silver market. Recent data and global events are hinting at a seismic shift that could redefine everything we thought we knew about this precious metal. If you thought silver was just another asset, think again. This could be the story that turns every assumption on its head. What's driving this potential surge? Stay tuned, because we're diving deep into the whirlwind of factors influencing the silver market. And remember, while you're unraveling this mystery with us, don't forget to hit that subscribe button. Join us on this journey to uncover what could be the most interesting and amazing news the silver market has ever encountered. In the ever-fluctuating world of finance, every detail matters, and in the silver market, recent trends have been nothing short of a roller coaster ride. Let's break it down. Just when analysts were bracing for a bearish trend, we witnessed a startling shift. Silver prices for a brief moment surged to a 7-month high, a glimmer of bullish hope in a market often clouded by uncertainty. But as quickly as it rose, it fell, leaving many to wonder, was this just a fleeting anomaly or a hint of something bigger on the horizon? To understand this, we need to consider a range of factors. First, there's the US dollar index. A slight decrease here by just 0.1%, paired with a dip in 10-year Treasury note yields to 4.2587%, has made silver more accessible to foreign currency holders. This is crucial because, in the realm of precious metals, the dollar's strength is a key player. A weaker dollar usually signals a green light for silver prices to climb. Yet, despite this, silver's response was lukewarm, a puzzling reaction that left market watchers scratching their heads. But wait, there's more. The anticipation of US non-farm payrolls data due Friday is like a ticking time bomb in the market. This isn't just any data, it's a critical piece of the puzzle, offering insights into the interest rate outlook. Lower rates, as indicated by a shift in Fed rate cut bets, could change the game for silver, a non-interest-bearing asset. Its appeal could skyrocket in a lower rate environment. And let's not forget, in this complex web of financial interdependencies, global events and central bank decisions are also key players, adding layers of unpredictability to an already volatile market. But here's where it gets interesting. Despite the short-term bearish signals, there's an undercurrent of bullish control. Look at the 200-day and 50-day moving averages for silver. They're both above the current price, a classic bullish indicator. This suggests that, in the long run, buyers might still have the upper hand despite the current bearish sentiment. Now let's connect the dots with the recent US labor market data. The ADP employment change and Q3 unit labor costs both came in lower than expected. This might sound like bad news, but in the world of silver, it's a potential game changer. Lower job creation and labor costs could prompt the Federal Reserve to adopt a more dovish stance, pushing yields further down. And as yields drop, non-yielding assets like silver become more attractive. So, what does this all mean for you, the viewer? The silver market is at a critical juncture. The next few days could be pivotal in shaping its trajectory. As we await the key U.S. Bureau of Labor Statistics reports, including the unemployment rate, non-farm payrolls, and average hourly earnings, one thing is clear. The sector's tendency may start shaping the calendar on when the Fed will start cutting rates, which will also set the pace of the USD price dynamics. But remember, in the midst of this financial storm, your voice matters. What do you think about these developments in the silver market? Are we on the brink of a major bull run, or is this just a temporary blip in an otherwise bearish trend? Share your thoughts in the comments below, and let's start a dialogue. Your insights are invaluable in this ever-changing world of finance. And while you're pondering over these market movements, don't forget to hit that subscribe button. Stay with us as we continue to unravel the complex tapestry of the silver market, bringing you the latest updates and in-depth analysis. Delving further into the enigmatic world of the silver market, we find ourselves at a crossroads of global economic signals and market speculations. In this segment, we're going to untangle the intricate web of events and data that are shaping the future of silver prices. As we venture deeper, we uncover layers of complexity that make this market not just a mere commodity trade, but a reflection of the global economic pulse. Let's start by looking at the broader economic landscape. The recent downward revision of US Q3 unit labor costs to 1.2% is more than just a statistic. It's a subtle indicator of the shifting sands in the labor market. Why does this matter for silver? Because these labor costs are a key metric influencing the Federal Reserve's policy decisions. With a downward trend in labor costs, we might see a more dovish stance from the Fed, potentially leading to lower interest rates. And as we know, in a lower interest rate environment, non-yielding assets like silver become increasingly attractive to investors. But the plot thickens with the ADP employment change figures. The numbers came in lower than expected, signaling a cooling job creation pace. This might seem like a worrying sign for the economy, but for the silver market, it's a different story. These figures suggest a potential shift in the Fed's monetary policy, which could be a catalyst for a bullish trend in silver prices. Now let's zoom in on the upcoming U.S. Bureau of Labor Statistics reports. The trio of the unemployment rate, non-farm payrolls, and average hourly earnings are more than just numbers, they're potential market movers. These reports are not only closely monitored by the Federal Reserve, but also by silver market investors. A deviation from expected figures could inject volatility into the bond market, consequently influencing silver prices. Speaking of market movements, we can't overlook the role of U.S. bond yields as they trend downward, with the 2-year rate fixed at 4.59% and the 5-year and 10-year yields at 4.11% and 4.12% respectively. We witness an intriguing scenario unfolding. Lower bond yields reduce the opportunity cost of holding non-yielding assets like silver. This shift could be a boon for silver prices, drawing more investors towards this precious metal. But what about the technical indicators? The Relative Strength Index, RSI, and the Moving Average Convergence Divergence, MACD, on the daily chart offer valuable insights. The RSI's negative slope within positive territory and the rising red bars in the MACD hint at sellers gaining traction. However, the silver lining, quite literally, is the price's position above the 20, 100, and 200-day simple moving averages, SMAs. This configuration is a bullish signal, suggesting that despite the short-term bearish pressures, the midterm trend could be dominated by buyers. In conclusion, the silver market is painting a picture that is as complex as it is fascinating, with a mix of economic data pointing in different directions and technical indicators offering a glimmer of bullish hope. It's a market that demands our attention. As we continue to observe these developments, one thing is certain: the silver market is not just about the precious metal. It's a barometer of global economic trends and investor sentiments. Continuing our journey through the captivating landscape of the silver market, we find ourselves amidst a flurry of economic indicators and global events, each playing a pivotal role in shaping the future of this lustrous metal. As we delve deeper, it becomes increasingly clear that the silver market is a complex tapestry, woven with threads of macroeconomic trends and investor psychology. In this segment, we'll explore the nuanced interplay between the silver market and the broader economic environment. The silver market, much like a sensitive seismograph, reacts to the slightest tremors in the global economy. Each economic report, each policy change sends ripples through this market, creating patterns that are both intriguing and revealing. Let's first examine the role of the Federal Reserve, a key player in this narrative. The Fed's monetary policy decisions are closely watched by silver market investors. Any indication of a shift towards a more dovish policy, perhaps in response to the cooling job market or subdued inflation pressures, could signal a green light for silver prices. This is because lower interest rates decrease the opportunity cost of holding non-yielding assets like silver, making them more attractive to investors. But the story doesn't end there. The global economic scene also plays a crucial role. From geopolitical tensions to trade agreements, every global event has the potential to sway investor sentiment and, consequently, the silver market. These events can trigger safe haven buying, driving up silver prices, or they can bolster investor confidence in riskier assets, leading to a sell-off in silver. Now let's shift our focus to the technical side of the market. The Relative Strength Index, RSI, and the Moving Average Convergence Divergence, MACD, on the silver price chart offer a window into market sentiment. Currently, the indicators suggest a cautious stance among traders with a hint of bearish momentum. Yet, the fact that silver prices remain above key moving averages, a classic bullish signal, cannot be ignored. This suggests that, despite the short-term volatility, there is an underlying confidence among long-term investors in the silver market. Furthermore, the support and resistance levels provide critical clues. The current support levels, especially the 20-day and 100-day simple moving averages, act as crucial thresholds. A sustained price movement above these levels could reinforce the bullish sentiment, while a drop below could signal a bearish turn. In essence, the silver market is at a fascinating juncture. It's a market that's being tugged in different directions by a variety of forces, from Federal Reserve policies and U.S. economic data to global geopolitical events. Each of these elements adds a layer of complexity to the market's dynamics, making the task of predicting its next move both challenging and exhilarating. As we continue to navigate through these turbulent waters, one thing is clear: the silver market is more than just a commodity trade. It's a dynamic arena where economics, politics, and psychology converge. It's a market that demands our constant attention and offers endless insights into the workings of the global economy. As we venture further into the intricate world of the silver market, our exploration reveals a landscape shaped by an array of economic indicators, global events, and market sentiments. In this segment, we delve into how recent developments in the U.S. labor market and monetary policy are influencing silver's trajectory, further unraveling the complex interplay between macroeconomic forces and commodity prices. One of the most intriguing aspects of the silver market is its sensitivity to changes in the labor market. The recent U.S. labor data, particularly the non-farm payrolls and unemployment figures, offer crucial insights into the health of the economy. These statistics are not just numbers. They are vital signs of economic vigor or frailty. A robust labor market could signal a strengthening economy, potentially leading to a more hawkish stance from the Federal Reserve. Conversely, signs of a slowing job market could prompt a dovish turn, potentially lowering interest rates. For silver, an asset that thrives in low interest rate environments, this could be a catalyst for growth. But the influence of the labor market extends beyond the Fed's policies. It also impacts investor sentiment directly. A strong job market can boost investor confidence, leading to a greater appetite for riskier assets and potentially diverting attention away from safe haven assets like silver. On the other hand, a weakening job market can stoke fears of economic slowdown, driving investors towards the safety of precious metals. Now let's turn our attention to the Federal Reserve's monetary policy. The Fed's interest rate decisions are a powerful force in the financial markets, and the silver market is no exception. Interest rates influence the opportunity cost of holding non-yielding assets like silver. When rates are low, the opportunity cost decreases, making silver more attractive to investors. This relationship means that any indication of a shift in the Fed's policy can send waves for the silver market. Moreover, the silver market is also affected by the broader economic environment. Global events such as geopolitical tensions, trade disputes, and economic policies play a significant role in shaping market sentiment. These events can cause fluctuations in the strength of the US dollar, which in turn affects silver prices. A weaker dollar makes silver cheaper for holders of other currencies, potentially boosting demand. The technical analysis of the silver market offers additional insights. The current positioning of silver prices in relation to key moving averages and resistance levels paints a picture of cautious optimism. While short-term indicators might suggest bearish tendencies, the long-term view is more bullish. This duality reflects the market's ongoing struggle to balance immediate reactions to economic news with long-term trends and expectations. In summary, the silver market is a fascinating confluence of various economic and financial forces. Its price movements are not just reflections of supply and demand dynamics, but are deeply intertwined with broader economic trends, monetary policies, and global events. As we continue to observe and analyze these factors, the silver market remains a key barometer of economic sentiment and a compelling field for investment and speculation. As we further unravel the tapestry of the silver market, our focus shifts to understanding the intricate balance between macroeconomic indicators and investor psychology. This segment delves into the silver market's recent movements and what they indicate about broader economic trends, particularly in relation to monetary policies and global economic events. At the heart of the silver market's recent dynamics is the Federal Reserve's monetary policy. The Fed's approach to interest rates is a critical factor influencing silver prices. In a low interest rate environment, the opportunity cost of holding non-yielding assets like silver decreases, making it a more attractive investment. Conversely, when interest rates rise, the allure of silver can wane. Therefore, any hints or announcements regarding changes in the Fed's interest rate policy are closely scrutinized by silver market investors. Additionally, the strength of the US dollar plays a significant role in the silver market. As the dollar strengthens, silver becomes more expensive for investors using other currencies, potentially dampening demand. Conversely, a weaker dollar can spur demand for silver from investors outside the US. Hence, currency fluctuations driven by global economic events and monetary policies are a key piece of the puzzle. Moving beyond macroeconomic policies, the global political climate also impacts the silver market. Geopolitical tensions, trade disputes, and even environmental concerns can influence investor sentiment. In times of uncertainty, investors often flock to safe haven assets like silver, boosting its price. On the other hand, periods of global stability and economic growth can redirect investment flows away from silver to other asset classes. Now, let's consider the technical analysis. The silver market's technical indicators, such as the Relative Strength Index, RSI, and Moving Average Convergence Divergence, ACD, offer insights into market momentum and investor sentiment. While these indicators suggest a cautious stance among traders in the short term, the fact that silver prices remain above key moving averages hints at underlying bullish sentiment in the longer term. Furthermore, the levels of support and resistance play a crucial role in determining the market's direction. The silver market's response to these levels can provide clues about future price movements. A sustained move above key resistance levels could indicate a bullish outlook, while a break below support levels might signal bearish trends. In conclusion, the silver market is a complex ecosystem influenced by a multitude of factors, from the Federal Reserve's monetary policies to global economic events, and from currency fluctuations to technical indicators. Each aspect plays a vital role in shaping the market's trajectory. Understanding these interconnections is crucial for investors and market observers alike as they navigate the ever-changing landscape of the silver market. As we continue to monitor these developments, the silver market remains a fascinating study in the interplay of economics, finance, and global events.